say hello. Our trainer for today is on standby and he's ready to come on board. We just have 4 minutes left before the flight takes off. So we just have 4 minutes to exchange pleasantries, to have fun, to laugh, and to prepare ourselves for the takeoff of our flight for today. Ma'am Buhari, I don't think maybe you just came here and you went to pick beans. Don't worry. We'll catch you on. They're refusing to unmute your mic. So generally, I hope that we've been having an amazing session. Today we're going to be talking. Okay, she has unmuted her mic. She doesn't want me to drag her. Hello, ma'am. Okay, I understand. So sorry for that. So sorry. So just concentrate on your driving. Just concentrate, ma'am. We have permitted you. All right, ma'am. Okay, so we have 3 minutes left, and today we're going to be talking about taxation from one of the most proficient, most sassy, most intellectual person. I mean, Africa's topmost, or one of Africa's finest taxation experts. I'm telling you that you're in for a ride today. Trust me, everything that you've gained from the first day up until today is just the tip of the iceberg. What you're going to hear today will blow your mind. Trust me, guys. If at the end of this session your mind is not blown, please drag me. Do you understand? Just tag my name on Facebook, on Instagram, on LinkedIn, and drag me very well. Take me to Twitter and drag me. Tell the whole world that I promised you that we're going to be mind blown and you were not. Because trust me, you will be mind blown today. The things you would hear, the secrets you hear, so many things that you never knew about. You're going to have an interesting, very, very interesting, immersive, and intellectual session today. So just get ready. I hope you have your writing pads, you have your biro, whatever it is that you have to take down notes, because trust me, guys, trust me, it's going to be very, very immersive. You have never ever had a session, an electrifying session like you're going to have today. So we just have 1 minute left, and Mr. Tehemba Sepa, who is an accounting professional and taxation expert, he's going to come on board and he's going to take us on taxation policies, regulations, all you need to know, all the myths. Is going to disabuse your mind on everything that you think you have known before when it comes to taxation. So if you're here, welcome on board. I can see Echo Power. Good evening, sir. I trust you had an amazing weekend. I can see Mr. Emmanuel. I can see Miss Maureen. Welcome on board. It's such a pleasure to have you all here. So it's 10 minutes past 7, and we are beginning right away. Good evening, Mr. Tehemba. Are you ready
Hi.
to? Good evening,
Yeah,
sir.
I'm ready. Hi, Oswanas. Good evening.
Good evening, sir.
Yeah, thank you very much for holding us down to this point. Good evening, everybody. Please confirm if you can hear me, please.
We can hear you, sir.
Okay. Good evening, Mr. Emmanuel. Good evening, Mr. Buhari, Echo Power, Mr. John Glad, Mr. Yahaya, Miss Blessing, Miss Maureen, and everyone on this call this evening. How are we doing today? Are we ready to learn this evening?
Very well, sir.
Okay, please, this is going to be a very, very communicative class. So as time goes on, you may need to raise your hand if you want to say something so that we'll have a very seamless learning experience. So we'll be commencing right away. Hello, are we together? Please, if you are on this call, please type I'm on in the chat box. Let me know that we're connecting. Because as you can see, I'm speaking to myself and customers. Okay, I can see one person. All right, I am on. Please, if you are on this call, please, can you indicate in the chat box? Okay, I can see Mr. Buhari. Because I want us to connect this evening. This is going to be a very, very seamless learning experience. Okay, thank you, Mr. Usman. Thank you. Okay, thank you. At least we just have 4 people who have said so far. Are we together, please? Okay, I can see more coming in. Okay. Okay, that's fine. Good evening, everyone, once again. I want you to do 2 things quickly before we commence. Kindly get your writing materials, get your jotter, get your biro, get your pad, anything you know you can be able to take notes on, because this is going to be one of the best task class you ever attend or ever get to be in as a business owner. So please, if you don't have your writing materials with you, I would like you to kindly get your writing materials, get your jotter, get your biros, get your pad, anything you use to write, so that we'll commence, because we are commencing now. So today we're looking at how you navigate the tax landscape as business owners. I know on this call, of course, all of us on this call as business owners, because this particular class is about how to grow your business. And of course, you can't talk about how to grow your business completely because without mentioning the tax aspect of it, because tax is what is inevitable right now anywhere in the world. So this evening, we are going to be dissecting tax as business owners. So I know on this call, we have 2 types of business owners. Those that, of course, 2 types of business owners that have registered their business. Those that registered their business as business name, and those that registered their business as a limited liability company. So before we go into that, let's look at the course overview of this course and the learning objective. So someone that is led by the spirit of dreaming this evening should kindly help us read what you can see on the screen. Anybody, please.
We can't see your screen, sir.
Oh, wow. Really?
I can see the screen now.
Okay, can you see the screen?
Yeah.
Oh, wow. So the person that cannot see the
Okay, we can see. We can see it, sir.
Okay. Course overview. This course will help you understand tax without the jargons. Learn about different tax, how to follow tax rules, and practical way to reduce your tax bill, grow your business confidentially, and avoid avoid penalties. You will also discover why tax matter and how they impact your business.
Okay, thank you very much, Mr. Uchenna, for that wonderful read. So this is it. This course will help you understand taxes without the jargon. Learn about different taxes, how to follow tax rules, and practical ways to reduce your tax bill, grow your business confidently, and avoid penalties. You also discover why taxes matter and how they impact your business. Are you ready for this evening? Are you ready for this evening?
Ready, sir.
All right, so let's move to our learning objective. So at the end of this training, participants will be able to, that's you on this call, and of course myself, because it's a 360-degree learning experience. You learn from me, I'll learn from you also. So at the end of this training, participants, that's all of us on this call now, will develop skills to maintain accurate financial records to ensure smooth tax compliance. The second one, we understand what taxes are and why they are essential for businesses and the economy. We understand how taxes impact your business operations, pricing strategies, and profitability. We identify common compliance challenges and learn how to proactively address them to avoid costly errors. We explore available legal methods to reduce tax liabilities and leverage tax incentives and reliefs to grow your business. So these are our learning objectives for this evening. So please, I want to emphasize again, this is a 360-degree learning experience. I get to learn from you, you get to learn from me, And also, I'm very keen on you putting down notes because this is going to be a very mind-blowing session. Please pay attention carefully. And of course, at the end of the session, we'll get to ask a lot of questions and answer ourselves. So thank you very much as we proceed. What do you need to know about your business taxes? This is a question. What do you need to know about your business taxes? Anybody, you can kindly raise your hand or mute yourself and tell me what you need to know about your business taxes. Let me have you on this call. You can kindly raise your hand and tell us what you need to know about your business taxes. Do you have business owners on this call?
Yes, sir.
Okay, so let's engage. Let's talk to ourselves. What do you need to know about your business taxes?
One is to kind of know the tax. Sorry, I've noticed my hand. I started speaking.
Okay, we
Go
can
ahead,
pardon you for
sir.
now.
Okay, I'm sorry. Yeah. One the payee.
Okay,
staff.
payee.
Yeah,
Okay.
and there are some the taxable and the non-taxables.
Okay.
Yeah, more particularly we that are dealing in the healthcare system.
Okay,
I think there's some waivers there. So I want to know them more. And in terms of the withholding tax.
Yes.
Yeah, that's something there.
Okay, thank you very much, Mr. Usman, for that wonderful contribution. Let's take one more person before we proceed. One more person. We have a lot of people this evening.
Hello.
Kindly raise up your hand before you speak, please. Yes, Mr. Jude, go ahead. Mr. Jude, go ahead, please. Okay, seems we lost Mr. Jude.
Hello, good evening.
Good evening, sir.
Good evening.
This is Mr. Uche.
Okay, Mr. Uche.
The question says, what do you need to know about your business tax?
Briefly, in 1 minute, yes.
When you talk about tax is a compulsory levy on everybody, both directly or indirectly. So when you're talking about it, it's a very interesting topic, which as a business owner, you just have to see how we navigate it so that we will not be paying excess of tax unnecessarily.
Okay.
So that is for that. So it's very important to know more about tax.
All right. Thank you very much. Okay, so thank you very much for that. So, okay, when issues of taxes are discussed, there is an important area that is always looked at. However, sometimes it's not looked at expressly, but it's intertwined with tax. And this is your business structure. Please write it down. This is your business structure. Business structure are directly linked to taxes, but most times we don't get to talk about the business structure linked to tax. But that is it. Business structure, anywhere the issue of tax is raised, of course, business structure is linked to tax. So I know on this call we'll have business owners here. So if you know, let's do a little engagement, please. We have business owners. I believe most people have registered their business with the Corporate Affairs Commission. So if you register your business as a business name, kindly type BN in the chat box. And if you register your business as a limited liability company, kindly type RC in the chat box quickly in the next 1 minute. If I don't know if the instruction is clear. If you're on this call and you have registered your business as a business name, please type BN in the chat box. And if you're on this call, you have registered your business as a limited liability company, please type RC in the chat box. Okay, I can see BN, Mr. Emmanuel. Okay, I can see it coming. Mr. Echo Power RC. Okay, let me see more. Okay, RC. Okay, I can see it coming. RC. Wow, we have a lot of RCs here. Okay, so this is it. When we talk of businesses in Nigeria, it's either you are running a business name or you're running a limited liability company. Of course, there are several other organizations like the Incorporated Trust who has to do with the NGOs and the rest. But when it comes to core business, either you are running a limited liability company or a business name at this level. So let me not stress to bore you with the several other ones that may not be applicable in this scenario. So in this class, we'll be focusing on business names and limited liability company. because most of us here either have a business name or a limited liability company. So let's see what the next slide is saying. The next slide is saying business legal structure, and there's an arrow, taxation. That's to tell you that the legal structure of your business is directly linked to the kind of taxes you are going to be paid, or the kind of taxes you are going to be assessed with, or the tax authorities that are going to be assessing your taxes. Am I communicating? Please confirm if you can hear, if we are still together, please.
No, we can hear you, sir.
We're
Continue.
together, sir.
All right. Let me come again. Your business legal structure is directly linked to your taxation. Your business legal structure determines the kind of taxes you pay. One, your business legal structure determines the tax authority that will assess your taxes. Two, and your business legal structure has a lot to do with the tax system. So as we proceed in this class, you understand how taxes are done for the RC and taxes are done for the BN, as we have stated in the chat box. So as you can see, this is a limited liability company, RC. Limited liability company mostly are companies that have the shareholder structure, the director structure, where you see on your CSA certificate, you see limited liability company, you see the number of share capital you have. You can see 1 million, 2 million, as the case may be. So simply what a limited liability, how to identify a limited liability company on your CSC certificate. And I believe, as you can see in the chat box, most of us here actually have an RC, which is a limited liability company. Then there is another one that we'll be discussing this evening, like I said earlier, which is the BN, which is the business name. So this evening, we'll be focusing on either a limited liability company and a business name and how it links to the taxes and what you need to do to be able to take advantage of the tax loopholes to be able to avoid taxes, like someone earlier said. So let's look at what this slide is saying. Slide is saying you don't need to necessarily pay tax as a small business owner to obtain a tax clearance certificate indicating that your business is compliant to tax. Let me come again. You don't need to necessarily pay tax as a small business owner to obtain a tax clearance certificate indicating that your business is compliant to tax. I know right now many people are already surprised that this guy by the left. You're already like what's happening now? They're always telling us to pay tax. And why is this guy saying you don't need to pay tax to obtain a tax clearance certificate? But this is it. I'm going to explain better in the next slide. Are we still together?
Yes, sir.
Okay. So let's see what the next slide is saying. So, and this is why you don't need to necessarily pay tax as a small business owner to obtain a tax clearance certificate indicating that your business is compliant to tax. Of course, many people will say, how will I be able to get tax clearance certificate if I don't pay tax? They're always ringing tax in my ear all around. How come? How possible is this? Of course, I know you're already surprised like this guy by the level. It's going to be very clear in the next slide. Please stay with me. Company income taxes. So when we talk of company income taxes are linked to the RC we earlier said. Companies that are limited liability companies, that's the RC that were earlier stated, pay company income tax. It is called company income tax, but some part of the world call it corporate income tax, but the abbreviation everywhere is CIT. The abbreviation everywhere is CIT. They call it company income tax in Nigeria here, but some other parts of the world call it corporate income tax, but they actually mean the same thing. And in other parts of the world, of course, there are different percentages based on how the economy are run and our tax law is set. But in Nigeria, I'm going to disclose to you now why you may not need to pay tax as a small business owner to be able to be cleared for tax. For you to be able to know that, okay, my company is tax compliant, you may not need to necessarily pay tax, but this is the reason. There is what is called turnover as a business owner. Turnover is the revenue you make, all the money that comes into your business per time. Let's take, for instance, like this our company income tax we are talking about. It is assessed annually. Are we together? Company income tax. I'm making these points and I'm repeating the point because I like you to be putting some notes down. That's why if you notice there are some points I make and I still repeat them so that they will sink, right? So let's proceed. Company income tax are actually assessed annually. So coming back to turnover, turnover is the money that comes into your business, cash inflow into your business over a particular period of time, which could be annually, could be monthly, could be weekly, as the case may be. But this turnover represents the cash inflow into your business. Please type "gotten" in the chat box if you have gotten that point, please. Let me see you type "gotten" in the chat box if you have gotten that point. Well,
is having a little network glitch. He would certainly join us. I hope that you have been having an amazing session so far. What he is trying to say from his last slide, please, if you can hear me, please let me know if you can hear me. You can hear me, let me know if you can hear me, please. Okay, you can hear me. So what Mr. Tehemba is trying to say from his last slide is, if your yearly turnover, which is the amount of money that has come into your business, I mean, well, if we're talking about an RC, it is believed that you have a company account, a corporate account. So whatever money that comes into your account, either yearly or weekly or monthly, if that money is not up to 25 million naira, then you are exempted from paying taxes. So if your monthly or yearly turnover is 0 to 25 million, then you are exempted. So from 26 million naira upwards, then you can pay tax. Okay, our facilitator is right back, so I'll just let him
Let me come in
cover
here.
it. Okay, sir.
You know, people don't understand how tax work in business. That's why you see they just play games all the time. If you truly want to run a profitable business from this one-man thing you're doing, you need to file in for tax. And you know why I'm saying this is that I don't work with FRS, Federal Inland Revenue Service. So you don't feel, oh, Uche Brown and his team, they want us to give them the money. No. There are some jobs you want to bid for, but just that a lot of us don't think big. We don't think why. That's why we say insisting, doing it just for survival. If you really want to scale up your business, you need to pay tax. Whether the government use the tax for road, light, they embezzle it, that is not our concern. I will explain something here now. There are some jobs you want to bid for. They'll tell you to go and bring your tax, your compliance document, your tax, your payee, your PENCOM certificate, NHITF, group life insurance, your, what's it on other again, ITF, and your tax clearance. And then they were not a deep, what do you call it? BPP, Bureau of Public Procurement. Some of us will not do government contract, but there are some private company you want to bid for. Let's say, let me look for who I know on this call now. Okay, let's say Mr. Jude, you're into printing. If you have to print for CBN today, you have to bid for, maybe say, print a brochure or print something for World Bank or for maybe printing and meeting or Ministry of Works or even Julius Berger or say NLG, Dantata, Dangote. They'll tell you to go and bring these things. If, let's say, Dr. Tochina, you also want to become an affiliate, like an HMO outlet for NLG, Share Nigeria, NNPC, Ministry of Works, or Julius Berger, Dangote or BOA, you bring those documents. But you know, many of us, we don't think big. We just do business for survival. You just get money, you can buy food, you can pay your rent, you can buy a car, stay maximum of maybe 5-bedroom duplex, you believe your life is okay. No, sir. No, ma. You can do better. So please, the issue of paying tax is something I know that other people frown at. The money they pay, no light, no road, no security. I understand. Even me that pay, it get me pissed off. But we need to understand that paying this tax, like what Mr. Temba is teaching this evening, is very important. But the way you now play around that tax matter, for example, like what Temba is saying, I just want to throw this in for Temba take over. If your turnover is not to 25 million naira, your general revenue is not vatable. Only when you are being charged is when you don't fight. Is that some of you that have ROC company, registration company, limited liability company, the day you want to apply for tax, you see what will happen. They're going to charge you 5,000 naira for each month you do not file. That will now accumulate. If somebody pay money into your account, put VAT inclusive. Go, those of you that go to ShopRite, please, when you go to ShopRite next time, do me a favor. That receipt that ShopRite gave to you, look at that thing. You will see VAT under. So charging of VAT, your customer will not run away. It's just that we have the wrong people that are doing business with us. That's how we feel. If we charge them VAT, they'll run away. So I want to bring in this out to know that it's not for us to start arguing in our mind. I will never pay. I will not listen to what he is saying. Please, no knowledge can be a waste. No knowledge can be a waste. Just listen, learn what he's saying so that you can apply it in your own business, either now or in the future. So thank you so very much. Mr. Temba, please you can continue while I'm on this off camera here. Thanks, sir.
Okay, thank you very much, Mr. Abraham, for that wonderful clarification. It is expected because when issues of tax is a very delicate issue, and when issues of tax are discussed most times, the wise people actually pay attention to how they'll be able to navigate seamlessly, while others are actually arguing within their minds. Well, I hope that we all pay attention to be able to get points from here that will help us to not to be able to pay much taxes and incur penalties, because the tax people are very brutal. They don't care whether care of our emotions, whether we are feeling bad or not. They will still take their taxes. So what we just need to do is to chin up and be able to navigate the tax landscape so that we'll be able to pay the minimum tax possible. So that being said, I think at this point we need to proceed deep into the class. So before the network interrupted, we're discussing about turnover. This is for companies that are limited liability companies, basically. Like we said earlier, companies that have RC. Of course, most of us here commented RC in the chat box. So this basically is for companies that are limited liability companies with the RC. So these are the companies we are focusing on when it comes to this tax. This doesn't apply to companies that are business names for now. We're getting to the companies that are registered for business name, but for now, we are being focused on RC at the moment. So please pay attention and pick points that will be able to assist you to be able to navigate the tax landscape. Thank you. So let's look at, let's proceed. As business owner, if your turnover is within 0 to 25 million, when I talk of turnover, like I explained earlier, your revenue, money that came into your business. Of course, most of us have registered our business, have done our corporate bank accounts, and we have been doing some transactions from our corporate bank account. Sometimes we even do some cash transaction. But if altogether both transactions will come to your bank or transactions will come in cash, altogether, if you have up to less than 25 million, your tax rate is 0%. But when it comes to turnover, there are two elements. There is what they call the turnover and what they call the expenses. Tax, please, let's get this point. This point is very important. Tax is charged on profit. Tax is charged on profit. But when it comes to weighing base tax, they weigh it by turnover. Let me come again. The percentage of tax is charged on profit. But when it comes to weighing who pays what percentage of tax, is weighed on our turnover. And turnover has to do with the revenue, the money that comes into our business. It could be money that came to our bank statement. It could be money that is not cash, but altogether, money that came into our business is what we're looking at. We're calling turnover. So if you have 0 to 25 million turnover, you are going to pay tax 0% on your profit. And before you arrive at profit, what do? Bring the turnover and reduce this allowable expenses. Allowable expenses has to do with the money, your direct cost, the money you use to buy what you are selling. Like, for instance, we have someone here that is into the medical line. The money that you use to buy your drugs are allowable expenses. Your staff salary are allowable expenses. Overhead costs, your rents, and other costs are also allowable expenses. So when you get your turnover and you reduce all those allowable expenses, then the profit is what the tax is charged on. So if you have a turnover of 0 to 5 million, of course, you don't need to bother about tax. But there is a but in capital letters, B-U-T. There is a but. Some people may think that, oh, I didn't make up 25 million, I need to just go and relax. I don't want to care about tax, but this is not it. If you don't file, you don't disclose your accounts to the tax authorities that, okay, see, I did below 25 million, so I'm not supposed to pay tax. These are my books. The tax office is going to charge you penalties for not filing. Am I communicating, please?
Yes, sir.
Okay, thank you very much. So if, of course, you don't even make up to 25 million, and you don't disclose to the tax office that, okay, this is my financial statement, I made below 25 million, and of course, I'm not meant to pay tax, the tax office will still charge you penalties for not filing. And the penalties for not filing is 25,000 from the first month, then 5,000 for the subsequent month till the month you end up filing. And if that accumulates for a long time, that's a lot of money you are putting out there just because you didn't disclose to them that you didn't make profit and you're not filing. So even if you don't make up 25 million, you need to get an auditor, do your financial statement, and file to the tax office. So that point, I believe that point is clear. Please type clear in the chat box. Please type clear in the chat box if you have actually gotten the point right, because I want everybody to follow and let's get these things right. Because tax, when it comes to tax matters are actually very simple. But most times, if we miss any step, the penalties are very grievous most times. So that's why I'm taking time to make sure I explain and we get this. Okay, thank you very much. I can see some charts in the chat box. So let's move to the next point. Turnover. I've explained turnover. So if you have 25 million to 100 million turnover, you're going to pay 20% tax on your profit. 20% tax on your profit. Let me say it again. If you make 25 million, between 25 million to 100 million, you are going to pay 20% on your profit. The base for the tax is turnover. They use turnover to calculate what you are going to pay, right? Whether you are going to pay tax or not. But when you are paying the tax is paid on your profit. So let me reiterate what I said earlier. The turnover minus your allowable expenses, that's your direct cost, money you use to buy what you are selling, then your staff salaries, your rent, your electricity bill, your staff training, and all those costs are allowable expenses. So by the time they deduct those expenses, then the profit is what they will charge the 20% on. Are we together, please? So let's look at the last 100 million and above. If you have 100 million and above as a limited liability company, if you have 100 million and above as a limited liability company, you are going to pay 30% tax on your profits. 30% tax on your profit. 30% tax on your profit. I want this to be clear so that people don't feel that, oh, if I make a lot of, if I all the money that comes into my account, all the money that comes to my business, I'm going to pay tax on. No, you are not paying tax on the whole revenue or the whole turnover or the whole inflow that comes into your business. You are paying tax on the profit. But when it comes to rating which companies pays which percentage of tax, it is rated on the turnover. So that's what actually makes them categorize your company to small company, medium company, and large company. So that's why in the previous slide I said, if you're a small business, you don't necessarily need to pay tax to get your tax clearance. So if you are doing 0 to 25 million, at least, of course, every business wants to grow, but the beginning of your business, maybe from the first year, second year, you are doing 0 to 25 million turnover. Of course, you are not expected to pay tax, but then you are going to pay penalties if you don't. They are going to pay penalties if you don't file your accounts. So I believe this slide is very clear. If it's clear, please type clear in the chat box so that we can proceed. Okay, I can see one coming in. Okay, thank you very much, Mr. So let's proceed to the next slide. So this is going to make sense when we are going deep into our discussion. Okay, thank you very much. I hope it's actually very clear. So what that was for, this was the explanation for a company income tax. That's for limited liability companies. That's people that had already typed RC in the chat box. So this particular explanation is for you. So let's proceed. Let's look at business name taxes. So this now, what I'm going to explain now is for people that typed BN in the chat box earlier. BN, which is business name. People that register their company with their business with the Corporate Affairs Commission as business names. So as you can see on the screen, you can see business name taxes are computed on income, unlike company taxes that are computed on profit. So here's how to compute your tax as a business name owner. Please pay attention to this. Please pay attention. Even if you didn't register your business as a business owner, you might take some points here, because what I'm going to explain now also applies to you that have employees that you're supposed to deduct personal income tax from. Because business name owners are categorized, their taxes are categorized as the normal personal income tax. So what is applied to people that employees, people that are employed by an employer? For instance, we have someone that is into medical line here. Those your employees that you employ that work for you, the taxes you're supposed to deduct from them and hand over to the government, they are actually computed the same way with business name owners tax. I don't know if that's clear. I don't know if that's clear. Can someone just unmute yourself and tell me if that's clear? Because issues of tax are very delicate and I want us to be following closely. Anybody on this call, are we actually learning? Are we getting value for this session? Please, if you're learning and getting value, please type value in the chat box so that we can proceed, please. If you're actually learning, please type value in the chat box so that I'll know that you're actually learning and getting value from this session. Are we together, please? Can you actually hear me? Okay, I can see two people type. Okay, value. I can see it coming in. I can see it coming in. Okay, thank you very much for the few people that have sent so far. But I believe the other people too are also on this call and are following, because this is a very delicate part of your business. If you don't pay attention to this now, of course, when the tax people come the next 5-10 years, you need to pay attention whether you want it or not, whether I like it or not, which of course may most likely run you out of business. So it's advisable and wise to pay attention now so that you avoid some future damages. Okay, please recap your last statement on BN taxes. Okay, thank you very much. Okay, thank you for the feedback, Mr. Uche. All right, talking about, let's start again. Let's start again on this business name. Talking about business name taxes. Business name are charged what we call personal income tax. If you have a business name, business names are charged personal income tax, which is the same as the taxes that are charged to employees. That's people that have an 8 to 5 job, that work in a company, that work in a business, that they pay them for their services monthly. The same taxes that they charge those people are the same taxes that they charge business name. Why? Because if you have a business name, the tax authority, the government doesn't see you as you see you as a legal entity on your own. Your business is attached to you. So they charge you based on the income you make from the business. That's why I see most people opt for limited liability company, because it's a legal entity and you can operate on your own. Of course, if you have a business going on and the business doesn't go well, and it has to do with a litigation or take you to court, there will be a case will be judged with the company, not you as an individual. But if you are running a business name and you have a litigation or a court case arises, of course, they will drag you into it because your business is not separate from you as a business name owner. So the same taxes, let me reiterate, the same taxes that applies to, okay, I can see Mr. John Glad. We used to fight tax people in our side. Okay, the same taxes that applies to employees, people that work 8 to 5 jobs, are the same taxes that apply to business name owners. And they should call that tax personal income tax. That's PIT. And those taxes are administered by the State Board of Internal Revenue Service. For Lagos is LIRS, Lagos Internal Revenue Service. For Abuja is FCT IRS, FCT Federal Capital Territory Inland Revenue Service. For Rivers State is Rivers Internal Revenue Service. For National Internal Revenue, for Benue. So as the case may be, depending on the state you are currently joining us from this evening. So business name taxes and personal income taxes, business name taxes and employee taxes, which is the payee. The personal income tax for the employee is called pay as you earn, are actually taxes that are administered by the State Board of Internal Revenue Service. For the limited liability company taxes, the RC taxes, those taxes are administered by the Federal Inland Revenue Service. The State Board doesn't have anything to do with those taxes. Those taxes are administered by the Federal Inland Revenue Service, which is the FIRS. But for these business name taxes and employee taxes, which has to do with payee, are administered by the State Board of Internal Revenue Service. I believe that point is clear. So how are these taxes computed? Of course, as a limited liability company, we know that if you don't make up to 25 million, you don't pay tax, you pay zero tax. And if you make up more than 25 million above, you pay 20%. If you make up to 100 million above, you pay 30%. That is for the company income tax, which has to do with the Federal Inland Revenue Service. So for this one now, how is taxes computed? Please pay attention. This part we are going to go into is a very delicate part that may seem confusing, but it's very, very simple. Trust me. So all you just need to do is to pay attention very well and take the key points down. So let's see what the slide is saying. Well, we have not gotten to the point where we look at numbers. I know, of course, some people will be saying in their mind now, we have come to this point again. Me, I don't like numbers. Even in school, I didn't do maths. But please, this is not going to be very hard. It's very, very simple. What you just need to do is to just pay keen attention. Let's go through this. At the end of the day, you discover that, oh, it's not even how you thought of it. So even though you like maths or you don't like maths, this is not maths. This is just figures on figures, please. So let's pay attention. So when it comes to the business name taxes, this is how it happens. As you can see the table here, there is what is called tax band there. There is what is called the rates they charge. And so in a case where your taxable, that's of course you have done, of course you have your income and you have done the few allowable expenses you have, then you have a tax base. So if you want to calculate how they compute tax for a business name and employee taxes, because it's actually the same way it's done. So everything I'm going to say here applies both to payee, which is that employees that work 8 to 5 pay, and also business name owners pay. It's the same pattern, it's the same tax, it's the same computation. So let's go into it. Let's take for instance Mr. Uchenna. At the end of the year, he has done business, and he has 100 million naira income. Then in between the 100 million income, he has paid staff salary, he has bought goods, he has done all the things he needs to do for the business to move forward. And he spent about 70 million. Or am I calling two high figures? Oh, of course, we are aiming at having very big businesses. So of course the figures are fair. So he spent 70 million. And what is left is 30 million. So now we want to compute these taxes based on the 30 million that is left. Or let's bring the figures down. Let's bring the figures down to 10 million. Let's bring the figures down to 10 million. Mr. Uchenna did business. He got inflow for the year of 10 million. Of course, all these staff salaries running around, buying direct, all those goods he has bought to sell, and all those transportation expenses, electricity bill, and the rest compounds to 7 million. So Mr. Uche, by the time you check his what came into the business, 10 million came, and you remove the expenses that are critical to the business. In this point, the expenses that are allowable are expenses that are critical to the operation of the business. It could be the money you use to buy the goods. It could be your transportation to pay that brought those goods to your warehouse. It could be your staff salary, electricity bill. So by the time you compute them all, they are 7 million. So if Mr. Uche, if we less the 10 million from the 7 million expenses Mr. Uche paid, we're having 3 million. So the tax office now say, come, we need to remove our part of that 3 million. So the tax office now brings the 3 million to the table. Okay, Mr. Uche, your taxable income now is 3 million. So this is what we'll do. Inside this 3 million, the first 300,000 of that 3 million, we'll charge it at 7%. So when you take, please, this, I want us to be very, very engaged at this point, because of course, I'll be expecting you to give me some answers so that it will sink more, please. So let's proceed. Mr. Uche, your taxable profit now is your taxable profit now, your taxable income now is 3 million. So this is what we'll do. The first 300,000, we're going to take the first 300,000 from that 3 million and charge it at 7%. So class, if you take 300,000 from 3 million, what will be left, please? I need answers, please. If you take 300,000 from 3 million, what will be left?
2.7.
Okay, thank you very much. 2.7. So now, if you charge 7% on the 300,000, 7% times 300,000 is what? As you can see at the other side of the screen here, 21,000. Is it correct? Someone should confirm if that's correct.
That is 0.07 times 300.
Times 300,000.
Yeah.
Okay. So we have gotten the first, yes. The first 300,000 will be charged at 7%. That's 21,000, right? We'll keep it at the side. So what is left is 2.7, right? So this 2.7, the next 300,000, we're taking we're taking another 300,000 from the remaining 2.7. What will be left?
2.4.
2.4. So when we charge 11% on the 300,000, what do we get? Someone should confirm. When we charge 11% on the next 300,000, 11% times 300,000, what do we get?
33K.
That is 3K. Okay, that means the slide is correct. Okay, 300, that's 33,000. So we'll keep that on the side too. Then we'll come back to the remaining balance. What is left? 2.4, right? Are we together?
Yes, sir.
Yes, sir.
Okay, I believe this is flowing. This is actually very simple math. So simple like ABC. So from that 2.4, we are taking next 500,000 from that 2.4. So we'll take 500,000 from 2.4. What will be left?
900,000.
Okay, someone said 900,000. Anybody has another opinion? Any other opinion? When you take 500,000 from 2.4 million, what will be left?
Okay, 1.9. Yeah.
I'm seeing, okay, let me check the chat box. Okay, yeah, I'm seeing people in the chat box, 1.9. Okay, yeah, 1.9. So when we take 50% of the 500,000, what do we have? When we take 50% of the 500,000, what do we have? Anybody?
75,000 naira, please.
Okay, 75,000. So the slide is actually saying the truth. Okay, 75,000. We'll keep that aside. Then we'll come back to the remaining. How much? How much are we left with? 1.9, right?
Yeah.
We are left with 1.9. Then we'll come back to the remaining 1.9 and take another 500,000. What will be left?
1.4.
1.4 million.
Okay, 1.4. Okay, 1.4. So when we charge that 500,000 now, we'll keep it and charge 19% on the 500,000. What do we have?
95,000.
95,000, okay. Okay, so we'll keep that 95,000 aside. What is our balance? What is our balance?
1.4.
Okay, 1.4. So we'll come to the next one here. What do we have here? What do we have down here? After the last 500,000, what do we have? 1.6, right?
Yes.
So the 1.4 now is not up to that 1.6 and it doesn't have a balance. So now we'll now charge it 21% on the 1.4. Is it clear? If that the money was more than 1.6 and there is a balance, we would have charged 1.6 and take the balance down to this 3.2. But since the money fits into the 1.6 and there is no extra, we'll now charge the percentage on the remaining balance, which is 1.4. So by the time we charge 21% on 1.4, what do we have? Anybody? 21% on 1.4. Anybody, please answer. Anybody's fastest finger first. Answers, please.
294.
21%. 294,000.
Yeah.
2 what? 294?
Yes.
294,000. Is that correct? Someone else to confirm.
Yes.
Is that correct?
Yes, it's correct.
Okay. Okay, 294. So let's add it up. 21,000 plus 32,000 plus 75,000 plus 95,000 plus 294. What do we have? What do we have, please? 21,000 plus 33,000 plus 75,000 plus 95,000 plus 294. What do we have, please?
518,000.
518,000. So 518,000 is the tax that Mr. Uche is going to pay for the year. What did he make? He made 10 million. He ended up paying how much? 518,000 naira as his tax to the State Board of Internal Revenue Service. Is this clear? Is this clear, please?
Yes, sir.
Okay. Okay. So this is what happens.
It's
so
not
people
clear.
that work
Sorry.
can
I ask a question, please?
Okay, go ahead, sir.
So how do we determine the tax band, or is it constant? This 300, 500, 500, is it constant? How do they determine
Yes.
it?
Okay, thank you so much for that question. So this table is constant. This is what every State Board of Internal Revenue Service in Nigeria calculates the tax on. It's constant. So they tell you that the first 300,000 you charge 7%, the next 300,000 you charge 11%, the next 500,000 you charge 15%. So this table is constant. This table is constant. But where there is a difference, where there is a little, let's say modification, is where we didn't have up to this 1.6, and we have to just charge the percentage on the balance. Because of course, different businesses will have different balance that may not be up to this figure. So when you get to any of these tax band that the balance remaining is not up to the figure, you just charge the percentage on the remaining balance. I don't know if that's clear, Mr. Uche.
No, this is a Jude, not Uche.
Okay, Mr. Jude. Okay, Mr. Jude, is that clear, sir?
No, not at all. You say that many people does not end up with 300,000. So how do they calculate it?
Sorry, I didn't get that, sir.
You say that when you are they are calculating tax for BN, business name, that is the same thing with our personal income tax. Employee, many of them does not end up to 300,000. So how do they calculate it?
This, when it comes to employees, calculated annually, not, of course, the same way this business name tax is calculated annually, the same way employee taxes are calculated annually. For instance, if you are earning 100,000, 100 times 12 is 1.2 million. So they'll start calculating the tax from 1.2 million. After they have deducted your 200, there is a relief they give for employees, 200,000 plus 20% of your salary. That's they give it as a relief. So when they reduce, when they remove that from, like the same, you see, like business name, what business name do is they use their expenses to reduce the income, and they charge the profit. But for employees, there is a 200,000 plus 20% of your salary. They give you as a relief. Then the balance is what they charge the tax on. So if they are competing for business, they don't come. If they are competing for employees, they don't compute it monthly. Sir, is it clear, sir? Mr. Jude, is it clear? Mr. Jude, I see on this call. Okay, let's proceed. So this is how for employee, how it's done is, if you, for instance, you are earning 100,000 naira a month, 12 months, 100 times 12 is 1.2 million. Let's assume the relief computation is like 200,000. So on that 1 million, they'll first take the first 300,000, take the first 300,000, second 300,000, 500,000 until the 1 million is exhausted. So they will add the taxes, they add it up, they will add this one, then divide by 12. So that's what you'll be paying monthly. So the month your salary goes up, they will review it and balance it with the rest of the months of the year. I don't know if that's clear, sir.
Yes.
Okay. Any other? Sir?
It's more understandable now.
Okay. Okay, let's proceed. I saw in the chat box when someone said it is more expensive to run a business name than a company. So what do we think? Is it more expensive to run a business name than a company? Is it more expensive? With these are computations that have calculated the taxes. Is it more expensive to run a business name than a company? What do we think?
I think it's more expensive because for a business, for a company, a limited liability company, if you file your tax, you're exempted from paying the tax if you're earning from 0 to below 25 million. And here you are as a business name, you are earning 10 million, like the example you used, and you have to charge as high as 500 and something thousand now from the profit of just 3 million naira. So I think it's actually, on the long run, more expensive. At the beginning, it might look cheap because you don't spend as much money to register a BN like an RC. but I think in the long run, it's quite expensive.
Okay. Thank you very much for that contribution. Actually, it's actually with our tax computations here, it's actually more expensive. It's actually more expensive to run a business name from our computation here. But then the State Board of Internal Revenue Service, most of the states, because they operate individually as the states, apart from Lagos and Abuja, that they're actually trying to enforce. Most of the states, their boards are like almost like they are dead. They don't enforce this business name. That's why I see people people have registered their company as business name are just balling. They don't even pay tax, and the tax office don't even come for them. The tax office doesn't have a net where they hook them. So that's why everybody's running to business name. But of course, by the time every other states like the FCTRS in Abuja and Lagos and I think Rivers and some other few states develop the muscle to start enforcing, there's going to be a lot of problem. There's going to be a lot of problem for business owners because business name owners. Because okay, someone raised hand. Okay, because when you see the computation here, okay, also I can see your hand up.
Yes, sir.
Yes. Okay, do you want to say something?
Yeah, I want to ask a question.
Okay, go ahead before we proceed.
Okay, so when Coach Abraham was explaining more on this tax issue, he said something about when you want to bid for big contracts, it may look like you're not paying tax now and you're not filing for tax and everything is fine. But when you want to bid for big contracts, you'll be asked to present those documents. So juxtaposing that with what you said, that in some states or most of the states aside Lagos and Abuja, there aren't tax offices, or the officials are like toothless bulldogs who, there's really no enforcement on that. So business name companies are balling. So is it that a business name company cannot bid for a big job? Because I feel like if they can, then finally one day they will still catch them, because of those documents, or business name companies don't bid at all for big jobs.
Okay, thank you very much for that question. Well, business names. The government does not even recognize business names as companies. You cannot bid for a job with a government contract with a business name. It's not even admissible. You just wasting your time to submit your paper because the next person that sees will trash it in the trash can. So government don't see business name owners as people that are actually running business. They see them that are running glorified hobby. That's how bad it seems, but that's just that's how bad it seems, but that's just the truth. The government doesn't recognize people that run the business name. They actually see them like people that are running glorified hobby. Because when you want to run a business, you run it correctly like a company. And of course, most of the contracts are only, in fact, all the contracts are only granted to people that have it. But of course, that's not to say a business name owner cannot get contract. You may get private contracts. Someone decides to call maybe your siblings, your uncle that is just coming from abroad, call you that, okay, use your business and do this thing for me, supply this. But that for government can never, at least not now, except they decide to change the policy in the future. But for now, government cannot give business name owners contract. You can get a contract from private individuals, your relatives, and the rest. But then, even serious business owners will not give a business name owner contract. Like you bid randomly and someone gives, except someone that knows you that decides, okay, let me help this guy, or let me help this lady. I don't know if that's clear.
Yes, sir. Thank you, sir.
All right. So let's proceed. A business name is subject to a minimum tax of 1% of its income if the annual income is below 300,000. So even though you make below 300,000, you are supposed to still pay 1%. So how does that funny it is? So let's proceed. What do you need to do to get your company income taxes and personal income taxes accurately? Let me have suggestions, please. I want this class to be very engaging because Of course, there is no absolutely correct answer in my session. I always say, and there is no wrong answer in my session. Why? Because we're all learning. No one is an island of knowledge. You can learn from me, I can learn from you. So let's kick it rolling. What do you need to do to get your company income taxes and personal income taxes accurately? Let's discuss. What do you need to do? Okay, I can see your hand up. Go ahead. I can see your hand up. Go ahead, please. Are you there? I can see your hand up. Can you proceed? Or anybody on this call, what do you need to do?
Can you hear me, sir?
Yeah, I can hear you.